Hi, everyone, and welcome to the video in the Age Trading course. In this video, we're going to be going over advanced market structure. Now, I want you guys to watch this video over 2-3 times, as many times as you need. Get your note pen and notepad out, because this will single-handedly be one of the most important videos in the course with tying this in with liquidity. Now, again, a lot of people know market structure on just a basic level of higher high, higher low, higher high, higher low, consolidation, lower low, lower high, lower low, right? But what have we talked about all in this course? Price plays off of one thing and one thing only: liquidity, right? Money, resting orders. So what does this essentially mean? This means the market does what? Induces, boom, and traps, right? Creates false structure, valid structure, and it's all based off of liquidity. So the whole higher high and higher low, if that was the case, we would be able to trade any trending market, but it's not, because the market builds in liquidity based off structural points. So building in every time frame narrative, this is how we really need to identify the chart and change our market illusion and how we view the market. Right off the bat, on a monthly, here's our high, right? That high, strong high external point of liquidity, right? And then we have our monthly low right here, where price failed to break a low. So keep in mind, every time we go over market structure, that we want to include internal liquidity and external liquidity based around structure. Internal liquidity and external, right? We want to look at traps, valid breaks in structure, right? And also we want to look at buildups, and then retail traps and smart money traps, right? So we have that. So again, we have a valid run on external liquidity, which is our break. And then what do we have here? We have a valid break on what? Internal liquidity, right? So here we have that valid break. However, we have a failure to break lower on external liquidity via external structure, as we see here. And then what follows this failure break in the market, because it's failing to break lower, we get a structural break on this last high. Now, why are none of these highs significantly strong? All they did was form structure, right? Correct. But look how none of these highs ran any type of liquidity. And also, we started to build in here because we had another failure, right? So again, the only issue is they failed to break higher and they failed to break lower. So the next move was the move to break this low to run liquidity, but they failed to break higher. So that's what confirmed this order block, right? Last up candle before the down move, in order to go lower to our next checkpoint, where we were able to successfully break a high. Now, did it break the all-time range high here? Because this is your external point on this range. No, it didn't. What did it do? It broke, took the liquidity that was needed on an internal level, right? And then here, people are going to go, oh, but we failed to break this high. Yeah, we did, but look at what happened. We broke a high, failed to break a low, failed to break a high, but what is ultimately going to come next? That run on liquidity in order to go lower, because we already took internal liquidity. So again, we come up, and what do? We swipe internal liquidity. We play off the order block. And then you can see how price runs up and doesn't give a reaction. Now, why does price not give a reaction? Simple. Here was your smart money trap. Again, failed to break a low, failed to break a high, but price ultimately has to make a move. Now, why did price move down? Because the slowdown in momentum. No structure was formed here. Are there any higher highs or higher lows? No, this is all one single move. Nothing came back to mitigate, right? So that's why price finally came to the last low that was unmitigated and failed to break to run liquidity to now go lower. So keep in mind, we're still on a monthly level. People are still going to be confused why this happened. First move, we broke a high, failed to break a low. This that internal low, so we need a secondary break. But again, failed to break a high. So what's the next move? Wherever we're going to pull liquidity next, price is going to run to. Pulls internal liquidity because this already ran a form of liquidity. And then we get the move up. So now we need to identify everything. So we have our internal liquidity points here, but this is the external of the range, and here's the external here. Now, why are these traps? These are traps because this is buildup. So this is why structure and liquidity is so important, and how false structure plays off liquidity. Price failed to break a high, failed to break a low. Price failed to break a high. It broke this low right here, right? Broke that low. When it came up, it failed to break this low, but then it failed to break this high. So this will be ran out later, but look at what price ultimately did. It created the sell bias, and then it came into that last low where price was not mitigated as opposed to here. Again, you have the slowdown, the buildup, the valid break in structure, the trap here on both sides of the market, and then the actual move to run what? External liquidity. So what's the next point? Run external liquidity. But again, structure has to be confirmed because price can hit here and just go higher, but we need to build in order to come lower. So now going into the smaller time frame, right? We have our internal, external, our traps, and our actual valid breaks, which again, this was a valid break. Here on the pullback was that build of internal liquidity, and here was the swipe. And so what? The order block, or you could call it a breaker because you have the imbalance. So again, failure, but where is the internal liquidity? Here to go higher. We run those equal highs. Again, the market sets equal highs, known as structure, known as liquidity, in order to run it. So price forms, and now we have all this invalid price action, all this no structure, just how we had here. So now we're looking at our next sell down because we ran external liquidity. A lot of people will think this is a higher high. Let's get on that break and retest of resistance. No, look at how structure is being formed. Is this a higher high? It is. What has to come next to confirm it? The higher low. But remember, structure is based off liquidity. Failed to break, took the liquidity it needed. Now we're going to come down to come into here. And keep in mind, we still have this trap here because no structure was formed here. So again, now we'll come down to the weekly and we'll focus on this time and how we could have gotten to sells off here. So right off the bat, what do we see? That strong all-time high, all these internal breaks that are being confirmed, right? So you're building in structure. But again, we have to keep in mind last down candle before the up move. And this took a form of internal liquidity. So this is going to be a valid area where price is going to react to give potential buys. And we have to be aware of that. But if structure is able to pull liquidity and then break down and form a new low, then we'll be bearish. But if price forms new highs, then we'll look to retarget this all-time high. So we have to be aware of how structure is truly playing on every time frame and how to tie it in, because we could take sells and buys knowing where our valid points are. So right off the bat, we can see this move down, this push up that takes internal liquidity, fails to break lower and fails to take this high. So now we're in a market of ping pong where we're having that accumulation build up, but we could take sells and buys within our valid points of interest. And then once we start to build in valid structure, then we know which way the market will go. As of right now, failure swing, where we could play off here and we could play off here. Here's that buildup, came a low, fell to break a high, fell to break low, took internal liquidity, and now we're playing off this block. This is why sells are validated. So now I'm looking to potentially sell a little bit more. Again, within structure, here is the buildup of internal liquidity, failed to break a high, and then right here, failed to break a low. Now, why did price react off this FU wick or this buy area? and not give a sell because it failed to break the high. So it's going to react off here. It's not going to just take out a low. It has to pull liquidity. So it's going to trap on both sides of the market, build in fake structure. When here you have a lower low, you have a valid high trying to be attempted, but it still didn't break the all-time high. You have that internal break. And now you have respect, the buildup. Here is your swipe on internal liquidity. People are going to think this is a new higher high. It is, but it's not a valid high because no low was formed. So we'll take the last up candle before the down move, which is our order block. Right after we run these internal liquidity points, and now we can play off structure, but there's no structure in here. So now we're playing off essentially a range. But within the range, we have structural points. So we have our low and our high, but look how we have lower lows and lower highs, and we're building in internal liquidity off of external liquidity, and we're building in our new range. So now we'll go to the daily and look at how we could have gotten to these potential points using every time frame. So again, we have our area down here. So again, coming off the daily, how could we have taken sells off of newly found structure and order flow shift into our monthly point of interest? So right off the bat, we see an aggressive move down and a clean order block left. Now, let's actually look deeper off of structure. Is this structure? No, it is not. So all we have is a run on internal liquidity to the downside, and now we have to wait. This push up comes into our unmitigated candles. So we have this, and now we're just waiting for a new low or high to be formed. This is the low, right? So again, I'm just waiting. So we failed to break a high, and now we form some type of new low or new structural low. I will be looking for sells. So we push down, right? We have all this mumbleness in here, which we will get to on the lower time frame. We come up, failed to break a high, failed to break a low. So now I'm just waiting. We come up, boom, there's the break, but also this could be a run on internal liquidity. Now, how do we capitalize off of this? Here is our buildup. Here is where this is not structured. Now, do we get a break here? No. Do we get a break here? No. Here's the run on internal liquidity. Here's my first, here's my first buy I would have took. Now, I would have took this buy to what? The run on internal liquidity to come into what? The unmitigated order block. Now, why? Because this buildup was confirmed, right? Why did we not need to run any liquidity here? Because when we ran external liquidity, this formed in the low, and the buy up was not validated. So this was the run on internal liquidity to go back down. So no structure is formed here, but then you have structure formed. You have your low here. You have your high. You have your buildup or your accumulation. You have a high. You have a low. You have your buildup. Then you have your high, right? And your multiple lows. And then how can we confirm structure when there's no structure? Because we know how liquidity works. The rundown, you have that falseness, the rundown, right? To validate. But since the buy up wasn't valid, then you have the buy up, so this move is known as whipsaw, aka trap, aka inducement, because this fake structure playing off of what? Fake structure. So again, this is where you really need to look. High, low, build up, high, low, build up. There's the high. And then what do we have here? The low. And where are we going to sell again at? The breaker, because there's no internal liquidity. If any, it's right there. Now, we have to answer the why. Why does the market work like this? Because if it didn't, anyone could just sell, anyone can just buy, and then anyone could buy and sell within the accumulation. You have to know how liquidity works within structure and how the market traps. So again, right, what do we have here? Internal liquidity to come back to later. We get that break and we come down. So we're nearing our point of interest. Why are we going to keep going lower? Because we didn't hit it. We're going to get that inducement again. Failed to break the high. That's internal liquidity. It's not structure. So once we run internal liquidity, that's not a break in structure either. We could take buys off of this breaker, right? Because there's no liquidity on the downside. So now, again, this is not structure. We're riding the inducement to what? The last unmitigated order block for the down move. Once we ran this high, could we look for sells? Yeah, but no new structure was formed, so we take the buys up. Now we enter off the unmitigated order block. Why? Because structure is now newly bearish. No structure to the upside has been validated. All we've had is what? Higher highs, lower lows and lower highs be formed. And we're getting our valid runs on liquidity. So again, right, we'll have this to come back into, which again, we have a reaction here. Here's that internal liquidity. And then here's the breaker, right? So it's really that simple. Again, we'll have to keep our eyes on this just to pull liquidity, because it's that false move up to build structure in. Again, price comes down. We take out the low, but again, we come in, form the new low, but this did not take any form of liquidity. So we swipe, all right, we're playing off what? The breaker. So we're playing off the breaker. Price induces, because that's not structure. No high was formed here, you just formed a low. That's your run on internal liquidity. Price comes down, we form a new low. This gives the false move up, we confirm it here. So you could have sold anywhere on what? Valid structure. Valid structure with validated liquidity runs. Right? Boom, boom, boom. All valid. Why wouldn't you take no buys even though you have all this? Because this is not valid to begin with. This is to pull internal liquidity to come into a valid sell high and low. So we're basically riding structure with confirmed liquidity. Now again, we come into our point of interest, run internal liquidity, failed to break a low. So when price breaks this high, we didn't form structure. What did we play off of? This breaker. So again, what did we play off? The internal swipe, the breaker. Now where? None of this took liquidity, right? This took liquidity. So this is our last valid point. This is still buildup. We have to be aware of how liquidity works with structure, right? This is still considered buildup. Again, timing with entering trades. So what do? We run internal liquidity, we come into the breaker and order block. Where's our entry? Right after that low is taken. Pulls back into the order block, right? Because that wick would have pulled into that wick, and that's your sell entry. And now where are we selling into? Again, same thing here. That point of interest, because we have to be aware of it. Again, price fails to break this low, but then we get the low there, fails to break a high. So right here, sells were validated again on the break, and then failure to break, boom, FU wick. Sell entry to where? The false move. The only issue is failed to break a high, so we break down. But here is where we start to build in again, because we failed to break a low. Right? So again, all the buys up were not validated. You can see because no structure is being formed. So again, any swipe of internal, you could buy, and we come into where? The area I was talking about. The breaker that was unmitigated, and we run internal liquidity. So that leads us off of every higher time frame narrative, right? It leads us into what? It leads us into this current week and how we could have capitalized off of these sells. On the 4 hour, we see a valid swipe on internal liquidity, and then here we have a failure swing. Right? Again, no highs are formed and no lows, so you also have your buildup. So we'll go on the hourly time frame. Right off the bat, these sells are very simple. And where would we target? Right? This low. So again, coming into this current week. What do we see? Off of this is based off structure using liquidity, right? Price is no structure, failed to break a high, failed to break a low, failed to break a high. But again, the structure is the form. You have the false structure buildup. We take external liquidity. We have a break. But remember, this didn't form a high. So here's your false order block that we're going to play off of. Again, false here. So we come up, and what do we get? This is where we really break down off a structure. Smaller time frame of candle that formed a down move. So that's our order block. And what do we have here? On every time frame, because price is fractal, we have structure based off liquidity. So look how this really works and how the market really works, how you can get crazy entries knowing, right? This is just based off structure and liquidity. We failed to break a high. We failed to break a low, but we take internal. Comes up, fails to break a high. Here's your first buildup, right? Your first accumulation. Here's your manipulated move. Swipes that liquidity, comes into the block. We're getting internal breaks, which is confirmed here, right? Again, this is an Asia session, so we wouldn't have taken this sell, but look what happens next. From that range, you get that full-on break. So again, you have the full-on break coming down here. You have that false reaction because we're reacting off this that didn't form. So what do? We swipe internal liquidity here. We play off that breaker, but what's the issue? We come in, barely break this. Also the timing, this is Asia session, so we wouldn't trade this. Come here. We have the full on break. Now, what's the issue with this? And as you'll learn later on in the course, this was Asian session, and we didn't really get those full on breaks of that zone. So this is build up. So what happens? You have the false buy. You have right here, London open. Here's your sell entry right here. Why? Because you have to look at the overall structure points based off what? Liquidity. This is the leg. So again, price comes in. We get the reaction and we break the low again. But I'm looking for this to be ran out because why? Failed to break the low. So my safe entry would be right above that internal point. Again, comes in, swipes. And this is why price is fractal, because you could have caught an entry off this liquidity run to the low, and this gave the reaction. And then you could take the second liquidity run, and just looking at how structure is truly formed on each and every time frame. So again, getting into this week, we would have had entries anywhere here. This would have been my personal entry at London because of the power of timing and price and knowing how the Asian session works. So again, my entry would be off the block, right? And my stop would be right above it. So again, sorry, that's not the high of the wick. The wick comes in right there, right? So my entry would have been 1868. My stop would have been 1870. That's about 20 pip stop on gold. And my TP would still be riding out. And this entry is taken on the 5-minute structure and liquidity based off the what? Higher time frame, 4-hour daily area. So this is how we catch such extreme moves with such tight stops. So I would be holding it to here, but as far as right now, we could have partialed out there. We'd be running a 1 to 62 almost, just knowing how structure works and how the market plays off liquidity. So again, coming into here. Why would this be my TP? Because boom, right? That was that false reaction. Here's another clean entry. And again, this is at New York Open. But why here? Because this is going to give that false reaction. I'm still looking at gold to come into here and then go lower. So once we had that run and that false reaction, my TP would have been partialed at the run of this point because it failed to break that low, right? So we would have closed at a, well, partialed out at a 1 to 61.48 R&R, would have entered at 1868 and closed partials at 1782 over 1,000 pip drop, just because we know how liquidity works with structure based off all of our higher time frames. We took a 5-minute fractal entry off the daily structure, and that's the power of knowing market structure based off liquidity. So I hope this video really and truly helps, and we'll see you in the next one.